Hi everyone, I'm Michael Ram. Today, Kendall Tilton, Shuit Sagai, Andrew Ram, and I will discuss American Guitar Company. They provided us with data on prices for raw materials, labor, and other historical data, and they also provided us with figures from July so that we could figure out the cost of manufacturing the guitars. We used the normal costing system to find a manufacturing overhead rate to apply to each unit, and we use the standard costing system to find the flexible budget variances. Based on the outcomes, we will discuss which costing system is recommended for the American Guitar Company. We will discuss both the internal and external accounting systems, and Shuit will break down the variances that we came up with in standard costing. Here's Kendall to discuss internal reporting.
Hi, I'm Kendall, and I will be discussing the recommendation for internal reporting purposes for American Guitar Company. For internal reporting, we believe that American Guitar Company should switch from normal costing to standard costing. We recommend this because the standard costing system will allow them to track variances during the purchasing process, the selling process, and the production process, whereas using normal costing, they will only be able to derive a total variance between the activities. When using a standard costing system, they will be able to calculate the following variances: the price variance, the efficiency variance, the material usage variance, and also the spending variance. These variances will show the increases and decreases in the price and quality of the direct materials, as well as showing how skilled the direct labor force is. With a more skilled and experienced labor force, they will have less material wasted. For the variance correlated with the fixed manufacturing overhead and the variable manufacturing overhead, these will show increases and decreases in the total manufacturing overhead. These are correlated with the variances in direct materials and direct labor. Based on the efficiencies of the direct materials and direct labors, they could influence the manufacturing overhead variance. Next, Andrew will present the external reporting recommendation.
My name is Andrew Ram. I'm going to be discussing our recommendations for external reporting purposes for American Guitar Company. For external reporting purposes, we recommend American Guitar Company should continue to use the absorption costing that is required by generally accepted accounting principles. Absorption costing also allows American Guitar Company to inventorize their overhead costs, fixed and variable. That will affect their bottom line, taking those costs out, which will increase net income. Also, by taking those costs and inventorizing them, you will have higher assets on your books as well. We recommend they take out their current normal costing system and implement a standard costing system. The standard costing system would allow American Guitar Company to close several of the variances we discussed in the internal section to the work in process and finished goods inventories. This also takes these costs out of the bottom line and again increases the assets on the balance sheet. Also, by implementing this system, external users of the financial statements would have the ability to attain a better picture of how American Guitar Company does business. They could isolate, for example, their manufacturing process, the price and efficiency variances, and determine what the company does well and where the company has weaknesses. That's it for the external reporting purposes. That's our recommendation, and now I'm going to pass it on to Shoit.
I am Shoit Sagai, and I will be discussing the variance we found when applying the standard costing method. In regards to direct materials, the price variance under standard costing was unfavorable. This was due to the actual price of the direct materials being more than the actual standard price. This variance is hard to prevent as it is influenced by market changes and can only be predicted to the best of knowledge. The efficiency variance under standard costing was also unfavorable. This was due to more materials needed per unit than the standard allowed. This variance is easier to control via education of the employees and knowledge of the process. With this variance, the learning curve also comes to effect. As soon as the employees start to learn the process more, the less material it actually take. In regards to direct labor, the price variance under standard costing was unfavorable. This was due to the actual price of labor being more than the expected price. The efficiency variance for direct labor was favorable, however. This is most likely correlated with the unfavorable price variance. It is likely that they paid more for higher skilled workers, which resulted in less hours needed to produce each unit. In regards to the variable overhead variance and the fixed overhead variance, both were favorable. This correlates to the direct labor efficiency variance because less time was needed to produce each product, which led to the favorable variance in the variable overhead per unit. The favorable fixed overhead variance was the result of fewer hours needed to produce the product. Lastly, Michael will wrap it up with the conclusion. Thank you.
Based on the information we've just provided, we believe that management would be better equipped to deal with issues regarding price and efficiency if they switched to using a standard costing method for both internal and external reporting purposes. We were able to track variances throughout the manufacturing processes. This included direct materials, direct labor, variable, and fixed manufacturing overhead. Using these variances, we can determine where to focus in order to improve the manufacturing process. Thank you very much.